Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. Okay, so last week I thought that the 100 moving average would hold. That turned out to be a farce. On Monday, it shot down, got down to almost 5,100. Didn't quite hit the 200-day moving average. RSI got really down though, got down to 30, and then shot back up, closed the week at 53.44. RSI is at 45, about middle of the road. Biases to the upside for next week. The dollar also fell out of bed, ended the week flat, but got all the way down to 102, and then closed the week at 103.15. Remember, as the dollar gets weaker, commodities get stronger in relation to the dollar, and they're priced in dollars. The Qs, okay, I thought I'd bring this one up just so we could see a little bit of technology here and what it's doing. And this is the Qs, essentially, you know, a whole bunch of companies that are technology. This fell about 15%, ended the week about 10% from its all-time highs. And technology's little darling, Nvidia, with a massive market cap of what are we at here? 2.58 trillion. There you go. Okay, so from its highs back here to the lows on Monday, it was down 35%. Where it sits now, it's down 25% from its all-time highs. The Japanese yen, so the carry trade we were talking about last week, this is to give you a visual representation of that. So up at its highs here about a month ago, it was at 161. Then on Monday, it got all the way down to 141 and closed the week at 146. So maybe a little bit longer for those margin calls to get filtered out. We shall see. And the yield curve is it broke the zero line, which it had not done in, what is that, like 2 years? Way back here, July 6th of 2022. Okay, so, you know, 2 years and a month, and pretty incredible. So it finally broke it. What we're looking for on this is for a reversion, like a spike up, and that will signal the recession. We've been in upside down clown world now for 2 years and a month, and we're just about ready to break through here. And then we will enter normal times when long duration debt pays more than short duration debt, and the recession officially begins. And 1 month treasuries, great place to store your cash, still paying 5.37% as it has for over a year. Gold is essentially flat. Okay, so last week it was 24.70. This week it is 24.73. So what is that up, like 0.1%? No, it'd be a little bit less than that, 0.09, so whatever, it's flat. So it made a couple of bucks. Looking still really bullish on this. You know, we basically just got to break that all-time high that we set week before last, and we are off to the races again. Really excited about gold, especially with everything that's going on in the economy. If we get a pretty bad recession, like I'm thinking, this is probably going to get hit. But it'll just be the margin clerks. So fret not, do not sell. Gold divided by the S&P 500, essentially flat for the week. I was getting kind of excited on Monday because this got all the way up to 0.48. And once we get up to 0.5 and we're above that line, that is when gold should really take off. And it was pretty exciting. We essentially got a triple top here going back to October of 2023. It got that same ratio, and then it got it again here in April, and then we just hit it on Monday. Pretty exciting. GDX divided by gold. So when this chart goes down, gold is doing better than the miners. When it goes up, the miners are doing better than gold, and you just can't help but notice this general trend line on the way up. CEF is down 1.7%. Got down to $22 on, what was that, Wednesday? Yeah, Wednesday. So that was a tick if you could catch it. This is basically, I look at this as another way to store cash on a brokerage account. You're storing that cash in the form of, air quotes, physical gold and silver. If you want to get your own precious metals like real gold and silver, contact Andy Scheckman of Miles Franklin. Email him info@milesfranklin.com. Tell him In It to Win It sent you for your special price sheet. Andy has the cheapest deals that I am aware of on the planet for gold and silver. GDX down 1.75% for the week. I see support around 36. Resistance is still going to be up here where I drew the white line at 40. GDXJ is down 2.5%, which is what you'd expect. You'd expect that the miners, the junior miners, would underperform the major miners when it's going down. Still got support right around, I don't know, I said last week, I think 41 or 42. Just with that tick down on Monday, I'm kind of seeing closer to maybe I'm just being cheap, but like 39 to 40, somewhere in that range, I think would be kind of nice. Technicals are still middle of the road, 43. I'd like to see it sell off just a little bit more. And Franco-Nevada down 3.2% for the week. Getting pretty exciting right here. This is looking nice. It's just hitting on the 200 moving average. One thing I don't like is there's a little decreased volume and the 200 moving average is sloping down. Hopefully it will catch it. I think this may continue to get sold off a little bit. I still really like limit orders around 115, maybe tick it up just above to like 117, 118. But best gold royalty company on the planet. Wheat and precious metals down 3.2% for the week. Remember this one, the dividend is growing 10% per year. These were smoking deals down here. And yeah, I like this one a lot. As far as entries here, maybe a limit order around 52 or so, but I got a feeling it's probably going to hit this 200 moving average. But did get down there. I mean, got really close to it. But what was RSI there? 32. So that could have been it. That could have been it. Maybe it'll ride this 100 moving average up. We'll see. And Gold Royalty Corporation. This one also fell out of bed, but lining up with some nice back support right back here. Brian says we went over the Adriatic Metals update last week. So if you didn't listen to that, I read it on the plane and I went over it last week. You can check it out in the previous Monday market moves. And Brian says, in response to Adriatic, isn't that a spat between the regional and national government over who has the power to permit developments and nothing to do with Adriatic's mine specifically? Yes. And Wannabe Rockstar says, I would like to hear Rick Rule's opinion of the situation. Steve seems to be a little nervous about it. That's a correct interpretation, sir. I am slightly nervous about this, and I would love to get Rick's take on it as well. He's moved Adriatic up to a 6, which is overvalued in response to this tailings development. If you want to get your companies ranked by Rick Rule, then join me in the Rule Classroom. When we live stream, we have hundreds of people on there all asking questions, and that is my favorite price. It's free. And if you want a little more personalized experience, then join us in the Rule Classroom Plus. It's a small group of us dedicated investors. I'm taking your questions and I'm asking the master. We have an hour. You can ask them whatever you want live. If you can't make the event, it's taped. You also get pros like money manager Adrian Day, economic geologists Brent Cook and Joe Mazumdar. They're geologists that are walking these mines and projects that we're betting on. You know, you can ask each of these guys any questions you want. They've probably seen the mine, they've studied the company or not. You know, you get their take, and that Rule Classroom Plus is a $30 price point per month, and that is my second favorite price, almost free. So there is a link in the pinned comment below. I hope to see you there. I'm next scheduled with Rick for August 22nd. Metalla Royalty is down, what was it? It was 4.8%. Pretty compelling support right there at like $2.40. You know, it hit that back here back in February. I don't think it's a coincidence that it got down to almost to the penny, the same level, and then bounced right back up. So if you want into this one with Brent Heath, I think that you know, $2.40 is a pretty compelling price point. That may have been the tick though, because the RSI was down at 30. EMX is down 2.9%. I said that buck 75 was a nice limit order. So if you had that limit order in, if it didn't hit on Friday, then it certainly did on Monday, and good on you. This gap was filled back here, so that's pretty pretty important and pretty good. I like seeing those gaps filled like that because they usually do fill, and it kind of gives you an idea. You can almost put like an imaginary line right there in that gap, and that's right around where it hit. RSI got as low as 30 there on, what day was that? Wednesday. So maybe you come in for like a double bottom and you might get lucky and get a limit order around $1.60 or so. Origin Royalties up 7.9% for the week. This company is absolutely killing it. I've had a double on this. I'm debating trimming positions. We'll see. Selling any gold companies right now might be a mistake, but man, I had a heck of a run up here. Adrian Day thinks that this one could go as high as $1.20 before it's fairly valued. Gold, Barrick Gold is down 2.75%, 2.75% for the week. And yeah, still like limit orders down here around $16.50 or so, and got that on Monday. I mean, if you had that 16.50 limit order in, or 16.25, it filled, and congratulations, you got it. I think that was a really good price for Barrick here. Maybe we come in for a double bottom, but there was a lot of margin selling last week with the yen carry trade, so we'll see if this unwinds or not, but still like a limit order down there around that level. And Newmont is down 1.7% for the week. Let's see, I wrote 39 as support. Yeah, around 40. There is a gap right back here, so would like to see that filled around 38, 39. That would line up really nice with the 200 moving average, but look at the technicals here. RSI is at 55. That's just way too high for a purchase. Agnico Eagle down 1.3%. Still like it, support around 64, 65, something like that. Resistance is up here around 80. But, you know, I think normally these tend to correct down to the 200 moving average, and I think this will over time. B2 Gold lost 13.3% last week. So last week thought the resistance was around, I think I said 285, and you know, it's just looking at the 200 moving average there, broke down through that. Then they had a less than stellar earnings call. I mean, it wasn't that bad, and they got a dividend coming. But you know, we were talking about this for a while. You guys have been asking about this one, and I've just kind of always liked that $2.50 price point. You know, I mean, it's just hit there so many times. This company pays like a 6% dividend or something. It's 4 cents. Okay, 5.7 at current price point. Pays 4 cents every quarter, so 16 cents a year. And when it's less than $2.50, that's a pretty good deal. I think right around here where we're at, maybe if you really want a penny pinch, you put in one down here for like $2.40 for B2 Gold. G Mining Ventures down 8.7%. Got one more order in on this. This will probably be my last one. Got it in for, what did we get? $6.51. Closed the week 10 cents below that. Love this company. I think they are going to absolutely kill it in the gold bull market. Silver. Okay, this one's getting exciting. Down 3.25% for the week, 3.25%. Closed the week at 27.58. And yeah, this bold $26 line, I like it a lot. Eager Beavis says, I don't think that bold 4x support line you drew on silver is holding. Laughy face emoji. Cheers for a good one, and hope for a few cheap stocks. I'm going on record here. I think this one's going to hold. I think we have about a 75, 80% chance of this thing holding. And what I really like about this is RSI is pretty sold off, got down to 32, and we have this rising 200-day moving average right here, breaking out here on the RSI. MACD's turning up, Stochastic's turning up. I like this setup a lot, and I think we can leverage this on some of the silver miners. Maybe the tick was on Thursday, and I should have just fired and got it. But I think we're going to come back down and touch that 200 moving average and then bounce right off it. We'll see. Gold divided by the silver ratio. I love this software. This is so cool how you can plot all these different charts together. This one is almost 90 to 1. Okay, so I think last week it was like 87 to 1. We shot up even higher. So silver is very cheap in relation to gold. Here's one that we've talked about before that I don't bring up every week, but I see a tick in time here. So this is SIL. This is the Global X Silver Miners ETF. And most of this is wheat and precious metals. But look at this on Monday, RSI got all the way down to 33. And then on Wednesday, got all the way down to 30. Right on the 200 moving average, bounced right off the 400 moving average. And also it is right in this retracement here to the 61.8. So if you really want some of this SIL, I think a $28 limit order is pretty compelling, especially if now it's going to be critical that silver holds 26. And if it gets down to 26, I think this will touch it, and that will be a time to get some more. SILJ, the Junior Silver Miners ETF, down 4.5% for the week. Same looks just like SIL here. Gap down, found support on the 200 and the 400. And yeah, I think a limit order down here around maybe just above the 200 moving average, like $10.30 or 40 cents, something like that. I think if it comes in for this double bottom, if silver reaches 26, this will hit. And I think that will be a nice entry point. Maybe we can run another option like we did back there. Pan American Silver down 9% for the week, less than stellar earnings call, but have the rising 200-day moving average right here. I put a support line. I traced this back quite a ways. 1725 looks like a pretty compelling entry point. I might get more if it touches down there. SILV, Silvercrest Metals, down 10.4% for the week, just got washed out. Still have a decent position in this, although I've sold probably 30 or 35% of my original bet. Yeah, if this gets washed out enough, I might actually get a little bit more. We'll see. And Endeavor Silver down 8.3% for the week. So I said there was some support around 350. That got taken out. That doesn't matter anymore. Now it's sitting right on the 400-day moving average. I could see some support right here on the 400, but even more probably down here on the 200 around, I don't know, $2.75, something like that, maybe $2.70. 200 moving average is starting to flatten out, decreased volume, which isn't great. Might get a little bit lower, but on Wednesday, RSI was already down to 27. So hopefully we get a double bottom in that. And then anyone that's been waiting to get into Endeavor Silver can do so. Copper, paging Dr. Copper, down 2.8% for the week. Peter Greenwich likes the bottom of around 380, 385. I agree. Looks pretty compelling on the charts. So I think we need to be, dabbling and getting into some copper now. And the way I'm playing that is COPX. So on Monday, I had a limit order hit. Limit order was set for $40.60. And then when the market opened at 38.33, the order filled. So that was pretty cool. Got it for a 5% discount, something like that. So pretty sweet. Unfortunately, it's under the 200 moving average. We needed to break through. It broke through the 400. We just now needed to break through the 200-day moving average, and then we will be past that really strong soap bubble there. COPJ down 1.6% for the week. I thought I had a limit order down here for 1950, but I didn't. so much for that. But blew down through that, got as low as 1925, and then went up above the 200 moving average, looking kind of compelling for an entry here. I'd like to see like a double bottom right here, I think, first, although, limit orders only on this one, very low volume. I mean, like, look at the volume there on Thursday, 1,500 shares, just nothing, right? Very low volume. So limit orders only. This is extremely leveraged to copper. Remember, they only have like don't quote me on this, but I think it's like 10 million under assets. So yeah, very small, but super leveraged. And Arizona Metals also leveraged, down 3.8% for the week. I put in a limit order down here for $1.21. Hope it hits. I think it will. That's just lining up with like kind of the bottom right back here at 121 if it hits. And Maduro Capital down 13.8% for the week. Looks like we might be having kind of a pattern forming here. We shall see. I don't know how much this really matters because this company has such a small market cap. I don't know how much you can really go by the technicals on this. But yeah, just fantastic. If it comes back down here to the 200 moving average around 14 cents, I might grab a little bit more. And uranium closed the week at $81.40, still holding this floor that we've had drawn in for a while. Pretty exciting. Sprott Physical Uranium Trust. Now, this one is really exciting. So remember from last week, bought as much cash as I could transfer in 90 minutes, which was about 2% of the portfolio, and bought the Sprott Physical Uranium Trust. It has since shot up a little bit. That discount right there was 16 or 18% or whatever my quick napkin math could figure at the time, and since corrected up. And the new discount is 9%, I believe, something like that. If you're new to uranium and you want to get Lobo Tigre's take, check out Lobo's free report on uranium. Titled, "This Bull Market Has a Long Way to Run." It's a really good report. He goes into primary and secondary supply, Sprott's impact on the uranium market, how long it will likely take before the uranium market becomes oversupplied. He goes into a lot of detail. How many nuclear reactors are under construction, planned, proposed, how many gigawatts of energy they're expected to generate, how SMRs, small modular reactors, are likely to impact the uranium market, and projections all the way through 2040. So he gives real world examples of uranium stocks generating 11 and 13 times returns in only 2 years. So really great report. There's a link down in the notes below. Check that out if you're starting out in uranium, and even if you're not. I mean, I've been invested in this for 3 years, and I learned a lot. Cameco is down. No, I'm sorry, it's up. One of the few that's up 4% for the week. So it fell out of bed, had bad earnings, and then shot back up. So I rewrote this one right here to $35. We kind of got it in light yellow. I think we're about fairly valued here for Cameco. But man, Monday was a tick if you could catch it. RSI got all the way down to 23. So I'd like to see a little double bottom kind of around there. There's a lot of support around 35. Actually, maybe I should make that 36 bucks. And Kazatomprom down 0.4% for the week. Still like orders kind of around where we are now. I think it's fairly valued at this price point. And maybe, you know, I mean, if you want a limit order around 35 bucks, that would hit kind of right on that 400 moving average. RSI got down pretty low on Monday, all the way down to 30. And Gemini says, uranium, Kazatomprom is increasing production. What will that cause uranium to fall through the floor? Okay, so got an update from Justin Hune. He says, Wednesday night, Kazatomprom released their Q2 operations and trading update. Within this update, the company reported a 5% increase in year-over-year Q2 production on a 100% basis, and revised upward their production guidance for the full, rather getting into the weeds here, basically an expected increase of production of 3 million pounds. So on a 100% basis for full year 2024, it's approximately a 6% increase for this company. In the wake of this update, uranium stocks gapped down. There you go, there's the gap. But suffice it to say, another 2 to 3 million pounds out of Kazakhstan this year, if they actually hit their targets, barely makes a dent in the current supply deficit. In fact, according to our internal models, primary supply from uranium mines this year will fall short of primary reactor demand by 35 to 40 million pounds this year alone. If you want more details on the uranium market, check out his newsletter in the notes below. Any entries for Kazatomprom I see around, kind of follow this 400 moving average up. I think this will be a blip in time. And as people come back on, as the utilities come back on and start buying, remember they've only bought so far about 30 million pounds this year, and they need to buy another 150 or 160. I think this thing will turn. URA is up 0.8% for the week, so revised this one down a little bit, and this time I made it kind of light green, meaning that we're getting into some deals here. Yellow is like, I don't know, fairly priced, probably won't mind in a couple of years from now, but now we're starting to get into light green. Look at that on Monday. RSI got down to 27. Pretty incredible. Would love to see it come in here for a double bottom. Remember, if we're coming into a recession, which I think we are, these stocks are probably going to get whacked, and we might get some real deals here. Time will tell. URNM down 0.8% for the week. Kind of have some support now. I drew a little bit more of a green box here than URA because I think this is what it'll look like when it's a real deal. I don't know if you could tell that shade or not. I'm just doing this on the fly. But yeah, approaching a pretty good deal here, $40. I mean, to put this into perspective, if we go back here to September of 2023, this is when uranium was $68 or $69 a pound. And right now we're sitting at $81 a pound and the equities are the same price. So you're kind of getting, some uranium there for free, 12 bucks a pound. Not a bad deal, right? But sentiment is just in the toilet. And when you go on Twitter, everyone thinks the sky is falling. I seem to think that that's when we find good deals. URNJ, same kind of thing. Go back here, August, September. This was around $68, $69 a pound. And look at where we are now, but the uranium price is 81. Go figure. So bought more, got it at $18.72. Here's some ratios for you. Oh, this one was down 1.7 for the week, so it shot down. I mean, there's a tick there if you could catch it, got it into the 17s. That wasn't that good, but yeah, I like a buy for this now. I really do. URNM divided by uranium itself, coming in for a double bottom right here. RSI is pretty low. I don't know how much you can trade these charts, but this just gives you an idea that the metal has been performing better than the equities, and the metal's been flat. That means the equities are down. And this is URNJ divided by the metal itself. Again, way down here in the toilet, low RSI. URNJ divided by Kazatomprom, Cameco, and the Sprott Physical Uranium Trust, and just historically cheap since this fund has IPO'd. UROY, oh man, this was a tick. I did not catch it. Got down below $2, lining up with a lot of back support back there. I think there may be still some pretty good downside for these uranium equities, especially the penny dreadfuls over here. I think we may see below $2 again. I mean, this is looking kind of bearish right here. So I'd be looking to add more UROY if it got down into like the 180s or something and I actually caught it. I think that'd be a pretty good entry. And the U's, some people watch the Q's and we watch the U's. Check this out. Okay, so we got some back support going back here to 2021, and that's about all that's holding this thing, except, I mean, look at that RSI way down there, 25, closed the week at 27, super sold off. Tiny bit of back support right there. Maybe you're catching a falling knife, but it does look like the stochastic is starting to turn up. So if you've really wanted some of this company, I don't think it's a bad time. And Uranium Energy Corporation, love this company. I think there'll be a premium on American uranium. Also low RSI here. RSI got down to 28, closed the week at 31, so pretty low. Also would like to see a little double bottom here. Maybe it'll come, maybe it won't. But yeah, I think a decent entry point for this one. And crude oil is up 4.6% for the week. Okay, so last week we were talking about a double bottom here. went up, came back down, hit the double bottom. The information all we had was that one right there on Friday, and then it hit and bounced up. So that's pretty good for the oil equities. Gold divided by oil. So oil outperformed gold this week by 4.5%. Takes 32 ounces, 32 barrels of oil to buy 1 ounce of gold. Last week, I think it was 34. XLE. Okay, this one was exciting. So got sold off with the margin calls. Had the limit order back here that we've had since we set these. When was this? Back in May. And it finally hit at 86.25. So I know a lot of you guys have had this limit order. Congratulations, you got in. I've updated here the dividend amounts, and all I did, this is an ETF, so it's not exact, but I just added up these last 4-quarter dividends divided by 4, and then put the percentage dividend that you'll get if you buy it at these buy points. So you can see as this gets cheaper, your dividend percentage goes up, because you've got a better deal. Okay, so the final order is set back here for 79.75. I hope we get there. I don't think we will. Exxon Mobil up 1.7%. Really looks like a bear flag here, and I hope it plays out because I would love to get some more Exxon. I'd love to see it hit these levels back here. I don't know if it'll happen. We shall see. But yeah, here's the dividend amounts for this one, and this one's pretty easy because it's just 95 cents a month. At this price point, dividend is 1.9%. 3.19%. There you go. Chevron. Okay. I know a lot of you guys follow Chevron. Coming into a really interesting buy point. I think anywhere like now is good. Best would have been, what day was that? Wednesday? Yeah, Wednesday. And RSI got down to 29. Pretty incredible for probably the second best oil company on the planet. So just lining up with some back support right here. If you're a cheapskate like me, maybe a limit order for like 143, 142. And Blackstone Minerals down 3.1% for the week. I did grab an option on this one. I was debating between just buying straight up shares or getting an option. If you buy straight up shares at this price point at $14.25, that is a 10.5% dividend, assuming they can keep their dividends running at the same clip. So look at that on Monday. I think I was on a plane on Monday. Yeah, I was flying on a plane. So that's why I missed a lot of these. Anyways, yeah, so RSI got super smoked down to 19. You don't see that often at all. But I got the option on Friday, $15 strike price. It doesn't expire until January. So I'm feeling pretty confident on that. This last one that I ran on Blackstone was amazing as an option. Hopefully I can do it again. And Freehold Royalties up 0.1% for the week. Like a buy, like now. I mean, 8 cents, 9 cents a share at $13.50 is an 8% annual dividend. So it's even cheaper, even better dividend now at $13.29. Woodside Energy, this just continues to disappoint, down 3.8% for the week. Basically just a dividend play. I don't really see it. I mean, there is some support where it is right now. I want to get Rick's opinion on this. Hopefully he's done some work on it. But as far as technicals on Monday, RSI got down to 27. So kind of compelling for an entry, but this could just be a falling knife here. Petrobras, same kind of thing, fell out of bed and then shot right up. Closed the week at $14.21, up 4.6% for the week. I think a limit order anywhere around $13.50 or so looks kind of snappy. And natural gas is up 9.6% for the week. Pretty, I don't really see any patterns here. There's a gap right back here that I think will get filled. So I would guess, although it looks like natural gas is headed up for next week, I would think that as some more time goes on, that gap's going to get filled. Maybe we'll hit that $1.50 line again. Devon Energy up 5% for the week. Boy, what a tick if you could catch it on Monday. There was a lot of deals going around then, and got all the way down to like $41. I didn't catch it. but I've already got quite a bit of Devon anyhow. But yeah, just gapped right up, looking fantastic. Equitable, this one's getting kind of compelling. So that upward channel trend line that we drew broke. Now we got some back support right back here. Might see 29 or 30. That might be an interesting limit order for Equitable. And Birchcliff up 0.8% for the week. Let's see. Okay, so we got a limit order right here for $3.96. I had one for $4, but the cash didn't quite clear. Or no, I was on the plane on Monday. That's right. So I couldn't move the money, but got the limit order in once I got home at $3.96, just lining right back up right here. And then another exciting one here, Paydo. Now the limit order for that one did hit on, and what did we get it at? I think it was $9. Yeah, $9.97. So these are the dividend amounts that you get at these price points. I threw in this one down here. This is probably totally pointless. I put it down at $8, and it's because we had this massive candle going right here and then shot back up. And if we just take this out, like, I mean, this was a moment in time and not much shares being traded in that moment of time. Most of the time, my experience is when you have these gap downs like that, even if you have a limit order down here, it doesn't fill. And I didn't have this one in at the time. I just threw it in for, for funnies. Maybe this was probably one fund selling, right? Someone had to cover their margin calls, so they sold out of Paydo. And when you look at the volume that day, I think it was about 250,000. No, 600. What is that? 64,000. So this was probably one guy just clearing his balance sheet, and they're like, sell it, we need the cash. And it shot down. Sometimes when you have these limit orders, you get lucky and they hit. I figure it doesn't hurt to have it down there, but someone got lucky down at $8. It wasn't me. And thermal coal closed the week at 150. Met coal is down to 207. So getting kind of exciting. We've got Matt Warder scheduled for the show. The way we're playing that is this ETF, ironically named coal, COAL. And man, look at that on Monday. Just sold off. We are down to 10.5 million in assets, 470,000 shares. So it's down about 700,000 in assets since last week. But just touched down there. RSI got down to 35 and then bounced back up. If you're not in coal and you want a beta play in it, I think now is a pretty good time. Maybe set a limit order for $22 and hope it hits. Glencore down 0.7% for the week. $9.50 is kind of the next like stopgap that I see here. Ironically, the lowest price that we got it at before, or almost there. But $9.50 I think would be kind of a nice limit order. That'll line back up with a lot of back support back here. Love Glencore. AMR. Okay, so this one also dropped out of the sky. Got as low as 230. I thought we'd already put the floor in. Apparently not. We'll get more from Matt Warder on this one, but look at that RSI 26. Pretty incredible. Hitting on the 400 daily moving average, but also when we go out here to the weekly, hitting on the 100 weekly moving average, a pretty strong moving average. And Warrior Met Coal is down 0.9% for the week. I'm not buying this company. I don't have enough mental capacity to follow it, but Matt Warder got it, and he said he got it at, I think $57. So good on him. That $60 laser eyes mark that he had put in has exceeded and hit and then shot right back up. And Peabody BTU's up 2% for the week. I missed the option again. I was on a plane, but yeah, man, that would have been nice if you could catch it right down there. But I missed it. Anyhow, looking great. RSI at that moment was 39 and it shot back up, got some pretty stiff resistance up above it. It moved through the 20 moving average. Now it's got the 50, 100, 200, 400 above it. But if we run the kindergarten method of buying this thing at 21.50 and selling it at about 24, this one should pay out. Platinum down 3.9% for the week. fell below the 200 moving average. So the 200 moving average got taken out behind the woodshed. See about 900 as support right here for platinum. PPLT down about the same, 3.5%. I had a kind of a semi trade in on this one, and I got stopped out around 84 bucks, and that was, what did I take it for there? A 4.5% loss. Palladium, nice little support down right here at 860, and we exceeded that. We've been talking about 860 now for, how long was that? 6 months. And it finally hit. So this one's up 1.4% for the week. If you wanted to get some palladium, this is the way to do it. PALL, we're talking about the $79 level for like ever. And it finally hit. So good on you if you had that limit order in. You got it on Monday. The SPPs, so that $9, what were we calling a pipe dream limit order, has finally hit. I mean, you know, if you had that $9 limit order in there, so on Friday, when the market opened right there, it opened at $8.75. That's the price you would have got it at. So that would have been pretty cool. So congratulations, you know, platinum and palladium. Platinum divided by silver, still cheap. It's at 30, oh, we'll round up 34 to 1, about what it was last week. So I think it's a pretty good time to pick up platinum, and especially if you can find a dealer that is willing to swap silver for platinum, not a bad deal. About a kilo and a couple of coins will get you an ounce of platinum. If you, I think it's worth a call to Andy Scheckman or your local coin shop to see if they got it. Nickel is down 0.9% for the week. Peter Greenwich called this one as hated as lithium, which is pretty hated. Yeah, down below 16,000 a ton. The way we're playing that is NIKL, the nickel miners ETF. Like this one a lot. I thought 1260 was the floor. Apparently down here around 11, just north of $11 was. We'll see if we come in for a double bottom on that, but RSI got pretty stretched, got down to 26. Centaurus Metals, on Friday, it was up 30%. That's pretty incredible. But we got into this one for 23 week before last, I think. What day was that? August 1st. Had the limit order for 24, actually hit at 23, which was nice. Got all the way down to 21 this week and then closed the week at 27 cents. Iron ore down 3.1% and closed the week at 101. BHP, big iron producer. This one fell out of the sky. Maybe this option was ill-timed with their Philo acquisition with Lundin Mining. It's down 0.5% for the week, so half of 1%. You know, I like this company a lot. I think it should be one of the core positions, kind of like Exxon in the portfolio. You know, if we're entering a commodities bull market, this is one of the biggest ones on the planet. Rio Tinto, same kind of thing, looking like we're coming into some support here. I may just I talk about this every week and I just haven't done it. But I may increase these limit orders a little bit. We got $60 and I put 31 cents. I must have really got into the weeds here lining this back up. And then the next one down here for $58.50. Yeah, kind of like that. I think this one will do well. We got a dividend coming up here, and usually this gets sold off with dividends. So yeah, next week may be the time. And pick. So this one's got, we got this one from Joe, listener. It's got BHP, Rio Tinto, Freeport Morackman, I always mispronounce that, and Glencore. Yeah, coming into some back support right here on Monday. Man, that was a tick if you could catch it for $36. Pretty nice, basic, easy way to play this. I know in a lot of your guys' retirement accounts, you can only buy ETFs, so you can't just buy BHP or Rio. This pick ETF, I think might be a really interesting way to play it. And Bitcoin is up 4.5% as of this moment, recording on Friday, August 9th. So that could change in about 4 minutes. But as far as any patterns here, I'd like to see this get above the 200 moving average. I mean, we did have a tick back there if you could catch it, but yeah, we want to see it blow through this 200 and the 50 moving average, get above all these other moving averages. And man, I really hope Bitcoin does well, but see how it's sold off here with some of the margin calls. I think that when we hit the recession, this will get whacked. I really, really hope I'm wrong, because I would love to see this come in as the people's money. You know, with Trump saying that he's going to have a Bitcoin reserve, kind of like we have a gold reserve, maybe this will actually work. I hope it does. All righty. Well, I hope you guys got something out of that. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.